Senior citizens can now take health insurance policies. You must have read this in newspapers and news channels and even WhatsApp forwards. What is the truth behind it? Weren't senior citizens allowed to take any health insurance policies earlier? What does the new law say? I say that it will benefit youngsters more than the senior citizens. Why? Watch till the end.
Press the like button, share this video and subscribe to the channel. Your one action can trigger the algorithm and will help in making this video reachable to everyone. Thank you. Now back to the episode.
IRDAI, the insurance regulator in India, removed the words 65 years from the new law. And that's where media started concluding that now senior citizens can take policies. But is it true? So there was one regulation in India on health insurance. It said that all health insurance policies should have an entry age of up to at least 65 years. It was under entry and exit age clause. Then from 1st April 2024, the new law kicked in. It does not have any entry and exit age barriers or limits. That's why people thought that now senior citizens can buy health insurance policies. This is not true at all. Focus on the old clause on your screen. It said all health insurance policies. Here the word all is very important, which people missed. In short, it means that all the health insurance policies will be applicable to at least for the 65-year-old person. The companies cannot deny health insurance policies to any person just on the basis of their age. And it was at least 65. So that means insurance companies can offer policies to any person up to any age, let's say even 100 years of age, because there was no prescribed cap or any age limit as such. Nobody stopped senior citizens from buying health insurance policies. Companies were also not stopped from selling health insurance policies to senior citizens. Now these rules are relaxed. There will be no minimum age or maximum age limit on any health insurance policies. What does that mean? Policies can now be designed for any age group. Below 18, 18 to 40, 40 to 60, 60 and above, 70 and above, 80 and above, so on and so forth. That means companies will enjoy a greater liberty from now onwards. They can even attract younger public who are students, probably earning nothing. What does that mean for senior citizens? So those who are already insured will continue to be insured. Second, if there is any impact, it will impact only the senior citizens who are scouting for new health insurance policies. So the impact practically is nothing. See, even before this regulation, the senior citizens could get health insurance. So if a company has a policy dedicated to senior citizens, they could happily insure themselves. Nobody stopped them. Actually, people up to 65 years of age enjoyed the same policy as a person in 30s. Obviously, the premiums were different because of the age, but other terms and conditions and policy content were same. But what if the companies came and told us that, okay, from now onwards, we will cater more to people below 50. Insurers can say that older people are risky, so we are not going to insure them in the same policy where we are insuring a 30-year-old, right? They can very well say that. But there will be a different policy dedicated to such excluded groups. Then that is possible. But that can happen to any age group. One company can say that I will insure 18 to 30 years of people in one insurance policy and 30 to 50 in another. So the 32-year-old guy will not get the same terms and conditions or benefits of any other age group specific related policy. So one should not start making conclusions from only this particular thing. Insurance companies will do the math and hopefully will come up with better solutions to all age groups. But one issue is there and probably must be addressed is that not many insurers sell senior citizen specific policies. And if there are any policies, they are expensive. It is how the insurance works, right? The older you get, the risk of diseases or mortality increases. So the insurance companies either avoid selling such policies or will charge higher premiums. You can compare a regular and senior citizen policy on any platform. Let's say like a Policy Bazaar. I'm not promoting that platform, okay? So go to the individual tab, check the premiums. For example, Care Supreme Direct. That's one policy. The cover is 7 lakh rupees. The premium starts at around 800 rupees a month. Now switch to senior citizens. The same policy premium now starts at 2000 rupees a month. It is twice the regular policy. Let us see another example. HDFC Ergo Optima Secure. The cover is 5 lakh rupees. Premium starts at 900 rupees a month. For senior citizens, the same policy starts at 3000 rupees a month premium. That is more than 3x. So the health insurance is costly, and it is regardless of what IRDAI tells to insurance companies. Everything boils down to how much risk insurance company is ready to take to insure any person, whether it is old or young. If the insurance company has done their homework right, then it will happily insure people, and you will be getting insurance policies irrespective of your age. One thing to note that is that senior citizens who already have policies will not see any change in the insured or insurer relationship. The policy can run for the lifetime. That's how the health insurance policy works. In general, all health insurance policies, once approved and renewed without any break, can be renewed forever, and no one can deny such renewal based on the age. Thus, health insurance policies are lifelong renewable. Now, why is this important on a macro level? Yes, you are listening to an economist, so this angle is important for me. India's demography is changing. India is going to age sooner, probably after a couple of decades. Plus, medical advancements and economic progress has added the life expectancy. People are living longer. There is also a trend where senior citizens do not actually retire from their work life. And since more people are in the working age group today, the same cohort will get older together after some decades. So, in a way, it is an important step in this direction. Theoretically, the new regulation will benefit younger population more because the insurance company can say that the risk is lower for a person in their 20s. So let us insure them by offering them discounts or different policies or different schemes. They also know that their parents can pay premiums, so they don't have to take that risk into account either. It is important to adapt to new lifestyles of Gen Zs and millennials, and why insurance players should shy away from it, right? We see a lot more gym freaks, diet conscious, or digital nomad like me. The companies should therefore cater to such types of niches in the population. Now, because they can set any upper limit, they can say that okay, this particular insurance scheme is only for people up to say 35 years of age who have some gym membership or use this health tracking app, etc. They can very well innovate all these things into an insurance policy, which is a very welcoming step. So, a more liberalized policy, a more open nature of the policy is what I will welcome from this new regulation, where age is no bar. And to conclude, I will use the phrase of someone wiser who once said, age is doesn't matter. Thank you.